अभी जो passive AUM है, it's a little over 11.25 lakh crore out of the total mutual fund industry, which is roughly about 65 lakh crore. It's not a small number. Already it accounts for a reasonable size within the mutual fund industry, number one. And second, so you want to play Nifty, you want to play mid cap, so you go and do that, and that's it. So you do not, as an investor, want to take any more risk beyond that. I want to take market risk, that's okay. India being a good market, developing economy, the market itself gives you good return. Why do I need to break my head beyond that? So that's one way of thinking, right? Number one. Second is that if you're buying a Nifty ETF or a SenseX ETF, you're actually buying a set of 50 stocks. And then it's as simple as, you do the stock, you buy, sell. So that's a concept of exchange traded fund. How is it different from mutual fund?
Hey, my dear audience. I'm Nazil Doshi Thakkar and I welcome you all on this podcast on Investing with Dhan. My dear audience, I'm sure आप सबने passive investing के बारे में सुना होगा, ETFs के बारे में सुना होगा. Well, इस ETF का पोर्टफोलियो हम कैसे बना सकते हैं, पैसिव इन्वेस्टमेंट्स कैसे कर सकते हैं, तो ये सारी बातें जानने के लिए, समझाने के लिए आज मेरे साथ प्रेजेंट है मिस्टर अरुण सुंदरेसन फ्रॉम निपॉन इंडिया AMC. ही इज़ द हेड ऑफ पैसिव्स एंड मिस्टर अरुण, आई वेलकम यू टू आवर पॉडकास्ट.
Thank you very much, Zeel. A pleasure being in the show.
ग्रेट. सो सर, जैसे आज का हमारा टॉपिक है अबाउट ETFs. सो कैन यू एक्सप्लेन मी वन वेरी सिंपल थिंग, क्या डिफरेंस है ETF और म्यूचुअल फंड्स के बीच में?
ये सिंपल चीज़ है. ETF मतलब एक्सचेंज ट्रेडेड फंड. द नेम itself explains. So it is actually a mutual fund but listed on the exchanges and traded on the exchanges. So it's it can't be more simple than that. So our viewers, I'm sure, would be very familiar with buying stocks and trading in them, right? So when you do that, you are actually trading in a single stock. Whatever that stock is, you're buying and you're transacting in that particular stock. In the case of ETF, what happens is you are buying and transacting in a set of stocks. For example, if you're buying a Nifty ETF or a SenseX ETF, you're actually buying a set of 50 stocks, right? So instead of one stock, a basket, and it is a unit. And then it's as simple as, you do the stock, you buy, sell. So as simple as that. So that's a concept of exchange traded fund. How is it different from mutual fund? A mutual fund, it is a basket of stocks, but it is not listed, which means that you will not be able to trade during the day, or you cannot buy or sell during the day. In fact, that's one of the main differences. The ETF, you can buy, let's say, at 11 o'clock, you can sell it at, let's say, 2 o'clock. On the other hand, the mutual fund transactions happen end of the day. That's one of the main differences. Of course, there are other subtleties we may talk as we go along, but that's the main difference for ETF, and that's how it's differentiated.
ओके. सो जैसे अभी हमने समझाया कि एक बास्केट ऑफ स्टॉक्स में बाय कर सकती हूँ. जैसे निफ्टी 50 हुआ तो निफ्टी 50 की 50 स्टॉक्स को मैं एक ETF के थ्रू बाय कर सकती हूँ. सो यही चीज़ तो मैं एक इंडेक्स फंड के थ्रू भी कर सकती हूँ. सो कुछ फ़र्क है इंडेक्स फंड्स और ETF में?
Both are passive funds, meaning there is no active decision making. So there is no fund manager who decides, okay, let me buy this stock, let me buy more of this stock, let me sell this stock at this point in time. Vaisa wala decisions nahi hai. So if Nifty has 50 stocks, and within that, let's say HDFC Bank has a weight of, let's say, 11%, RAL has a weight of, let's say, 9%. So the Nifty ETF will buy exactly in that proportion, right? So when you're buying Nifty ETF, you're actually buying the underlying in the same proportion, nothing less, nothing more. The same happens in index. So conceptually, both are doing the same, that they're buying a basket in the same proportion. But the main difference is what I explained to you. ETF is listed on the exchange. You can transact during the day. And mind you, that can make a big difference. A lot of investors during the day, for example, you take any day, market could start flat, it might end up 2% up. Intraday, it could be 3% up, it could end up flat. So a lot of investors would prefer to have the optionality of buying or transacting at a particular point in time and not wait till the end of the day. So that's the main difference. On the other hand, in index, you are still buying Nifty, or you're making passive investment, but you're doing it at the end of the day.
Okay. Can you explain me how ETFs are created and redeemed? जैसे कि मैं ये समझ गई हूँ कि अगर हम निफ्टी 50 ETF की बात करें तो वो अंडरलाइन वही 50 स्टॉक्स खरीदेंगे. हम गोल्ड ETF की बात करें तो गोल्ड ETF अंडरलाइन गोल्ड बाई करता होगा, फिजिकल गोल्ड दे हैव टू बाई. बट हाउ आर दे क्रिएटेड? ETF बनता कैसे है, रिडीम कैसे होता है, हाउ द प्राइजेस आर मैच्ड? फॉर एग्जाम्पल ड्यूरिंग द डे ये भी तो हो सकता है कि 50 स्टॉक्स में अप एंड डाउन हो रही है प्राइस में, तो ETF का प्राइस एग्जैक्टली कैसे प्रोपोर्शन में रहता है?
Okay, so if you're a investor, right? I mean, I'm saying investor, you're not a very large investor who can invest 25 crore, 50 crore. You need to transact on the stock exchanges. So there are a number of units of, let's say, Nifty ETF, which is already listed, right? So these number of units, somebody is buying, someone else is selling. So depending on the demand and supply, it will get matched, and depending on how the volumes are, there can be slight differences like we just spoke, and the transaction will go through. This is exactly like how it happens in stocks. You're buying a stock, if there is more demand for the stock price tends to go up, and vice versa. It is exactly the same. There is just one additional mechanism when it comes to ETF, which is called a market making mechanism, or authorized participants, we call them APs, who are additional elements. This is not applicable in the case of stocks, right? In the case of ETF, there is an underlying value. So for example, if it is a Nifty ETF, suppose the value of the ETF is 250 rupees, right? Ideally, it should trade around that, right? Now, suppose there is more demand, it will start trading at a premium, and it can start trading at 252, 253. That's not an ideal scenario, right? Which means that somebody is buying, there is no seller, or there aren't adequate sellers to meet the buying, right? So therefore, at this point in time, what happens is there are intermediaries called market makers. They come and provide liquidity. So in this case, what happens? Somebody is buying, the market maker is selling. He already has units. So he is supplying liquidity, he is giving the units, and the buyer is, so the liquidity is provided. The market maker in turn will come and create units with us. Meaning he had certain number of units, he gave that units off, now he will come and purchase those units with us, with the AMC. Okay, so how will he do that? He has already given units, he would have got money, he uses that money, and he comes to us. What we do, we buy using that money the 50 stocks in the same proportion, create units, and that's how the number of units go up. Okay. Right? So that's a simple concept. So this is what happens in the stock exchange when units are already listed and people are transacting. There is also another way in which units are created for large investors. So right now the regulations are about 25 crores. Those investors can come to the AMC directly to create units. Okay. So for example, if you come to the AMC with an application of, for example, 25 crores, and technically in creation size unit and multiples, and so forget that, approximately that. Right. So you're coming with a 25 crore check. I will simply purchase on your behalf. Okay. Out of that 25 crore, 11%, if that is the weight of HDFC Bank, right, we will purchase that. 9% is RAL, we will purchase that. ITC, in the same proportion as Nifty, we will purchase at that point in time and give you units worth 25 crores.
ETF.
Exactly. Right. So this is another mechanism where investors can directly transact.
Okay.
Yeah.
So there is a concept of APs, authorized participants.
And market makers, yes.
Right.
They are interchangeably used.
वो आपके साथ closely work करते हैं in creation of these units and
yes,
even redemption. So I think ये opposite भी work करता है.
Exactly.
कि अगर supply बहुत कम हो गई है या demand बहुत कम हो गई है तो ये opposite action.
Exactly. Suppose somebody is selling. I gave you an example of somebody purchasing. Somebody is selling, there is more selling, there is no buying, right? So in this case, the market maker will be the counterparty. He will buy those units, thereby matching and you're providing that liquidity. So he's bought, now he is having a surplus of units. He's having those units, right? Now he will come and sell it to us. We will redeem and give him cash. So that's how it happens. Simple.
Okay, so great. मुझे अच्छा लगा ये सुन के how creation and redemption works. So now coming to passives, okay, I want to talk about index funds also. I have heard that Nippon is coming up with index funds which is around low volatility and quality fund. Can you explain me कि क्या unique है उस funds में?
So these two funds that you're talking about, they are new fund offers, NFOs as we say, and both these funds we are offering in the index format, not in the ETF format. So I'll quickly explain. So one of the fund is called Nippon India Nifty 500 Quality 50 Index Fund. The second fund is called Nippon India Nifty 500 Low Volatility 50 Index Fund. So these are the two offerings. Both these offerings, any index fund for that matter, they are rules based. Vaisa Nifty hai, Nifty is based on top 50 stocks by free float market cap. That's the rule. And it will undergo rebalance and stuff like that, but that's the rule for Nifty 50, which is based on market cap. Likewise, these two products are based on factors or what is called as strategy indices. So we follow a specific strategy to pick up those 50 stocks. For example, in the quality fund, we pick up 50 stocks. When I say we pick up, the index provider, when he constructs the index, they pick up 50 stocks and we replicate. Right? That's the role of AMC. We don't actively pick up, right? So 50 stocks are identified and picked up from 500, Nifty 500 universe. That's where the name comes from. Nifty 500, quality 50. The universe is Nifty 500, quality 50. So you pick up 50 stocks and there will be a definition of quality. What do you mean by quality? There will be a definition. In this case, there are three parameters. For example, profitability as measured by ROE. Higher ROE means company profitability is good.
Return on equity, कि उनका return on equity अच्छा है.
अच्छा है, right? Second is low leverage, meaning debt to equity. हाँ.
Loans कम है company का.
Yeah, debt to equity is low. Essentially what you're saying is the company is making money but not on borrowed money. It is not fueled by debt or leverage, right? So ये दूसरा चीज second parameter हो गया. और तीसरा is consistency of earnings. So what we call as earnings per share, EPS. So that has to be consistent year on year for the last 5 years. So all three parameters will be given equal weight for all companies except financial companies. Financial companies में debt equity का मतलब ही नहीं है. वो उनका business ही ऐसा है, they borrow, lend and things like that. So financial companies का 50-50% weight होता है and rest of the companies 1/3. Basis that what are the top 50 stocks, that becomes quality stocks. ठीक है? And then there is one more step. How do I determine weight? For example, 50 stocks हो गया. Do I give 2% to all stocks? Or should I say that this quality score इसका इतना है, इसका इतना है, इसके basis में मैं करूँ क्या? वैसा नहीं है. Quality score एक parameter, then it gets multiplied by the market cap. Technically the square root of free float market cap. I mean you need not get into so much detail, but let's understand that it's a combination of quality and the size as well. Suppose there are two companies. One is a very large company having a quality score. There is a small company having similar quality score. ये दोनों same नहीं है.
समझा.
Right? This will get a higher preference.
Yeah, उसका ज़्यादा market cap है तो उन्हें ज़्यादा weightage
मिलेगा.
इनका
Right?
कम market cap है तो उन्हें कम weightage
मिलेगा. So 50 stocks is selected basis quality score and then the actual weight is determined by a combination of quality and market cap.
float या market cap.
Right? So basis that 50 stocks will be selected. Therefore it becomes in a way quality portfolio.
Right.
And then once in 6 months it will be reviewed and every 6 months there will be a rebalance. Right? So that's the quality fund all about.
Right.
The low volatility actually uses only one parameter, which is nothing but in the last 1 year, what are those stocks which have had the least volatility? in price movement. So every day you look at price movement and look at the standard deviation, which is the variation of the stocks, whichever are those top 50 stocks in terms of least volatility, you go for that, right? So that's the concept. So both these funds, what are they trying to do? They are a variation on the general market products. When you say Nifty or a Nifty 500, all these are market cap based products, right? So here on that you apply filters, on that you apply certain factors based on rules and come out with a very differentiated risk return profile and a very different portfolio, and which can work in different ways in your overall scheme of things.
Okay.
So those are these two funds.
So even for low volatility, market cap is another factor. जैसे
Yeah.
आपने low volatility का score दिया.
Correct.
It's
So
just like
method is
quality.
very similar.
Okay.
So the score is based on the top 50 stocks are selected basis low volatility. Ultimately, the weight is decided by multiplying the the low volatility score and the market cap. Technically, this method is called tilt weighted method. There is another method called as factor weighted, which means if I only go by factor and not consider market cap, technically the portfolio could be having only small cap or only mid cap. It is possible, right? Whichever are the 50 stocks based only on this parameter, which is the least volatile, maybe only large caps have come, nothing else, right? All those things can happen, but by looking at a combination of a factor as well as the market cap, you have a tilt weighted portfolio. When compared to Nifty 500, you're tilting it basis a factor. So that's the fund all about.
Okay, great. I have a question surrounding passives. Okay, like this is an index fund जो आप launch कर रहे हो. This is a passive fund जहाँ पे कोई actively fund manager manage नहीं कर रहा है. Passive is usually helpful जहाँ पे मैं actively कुछ extra alpha generate नहीं कर पा रही हूँ. Now for example in the US it is very popular कि सब लोग ETF में invest करते हैं, passive funds में invest करते हैं. In fact there are instances where the passive has outbeaten the active, some of the active funds as well. But I believe ये तब possible है जब आपका market बहुत ही efficient है. Efficient market is when everyone is aware of all the information is available with everyone, तो उसमें कोई alpha generate कर नहीं पाता. इंडिया अभी भी एक ग्रोइंग कंट्री है. इंडिया में अभी भी लोगों को इतना फाइनेंशियल नॉलेज नहीं है. सो व्हाई इज पैसिव मेकिंग सच अ ह्यूज एंट्री? अभी तो बहुत स्कोप है ना फॉर एक्टिव टू जनरेट दैट अल्फा.
Zeel, good question. So I'll give you some numbers. अभी जो passive AUM है industry में, it's a little over 11.25 lakh crore out of the total mutual fund industry, which is roughly about 65 lakh crore. So the passive AUM accounts for roughly 17%. It's not a small number. Already it accounts for a reasonable size within the mutual fund industry, number one. And second, the rate of growth also, especially over the last 4-5 years, has been much faster than the rest of the categories. In fact, last 5 years, the passive AUM has grown at a CAGR of 50%. When compared to rest of the funds which have been growing at 23%. So the rate of growth is more than twice as much as the rest of the funds. So there is a lot of interest already from different types of investors, institutional, individual, high net worth, all of type of investors are already taking an interest towards passive, right? So that's about the numbers. Now, there are a lot of advantages for passive. For a moment, let me not even compare with active, and alpha generation is one part, right? There are a lot of other advantages as well. So one is obviously the whole thing. So you want to play market, right? So you want to play Nifty, you want to play mid cap, you want to play a quality, or right? So you go and do that, and that's it. So you do not as an investor want to take any more risk beyond that. I want to take market risk, that's okay. Market themselves, as you said, India being a good market, developing economy, the market itself gives you good return. Why do I need to break my head beyond that, right? So that's one way of thinking, right? Number one. Second is that index funds tend to be true to label. Now, what do I mean by that? If you invest in Nifty, it's 100% invested in Nifty. you get exactly that. Quality, this is a definition of quality, and you get exactly that now and forever. Whereas when it comes to active fund management, the style can drift over a period of time. The fund manager could change, sometimes, performance could be there, sometimes, it cannot be there, and so on and so forth, right? So, and then all these things come at a low cost for you, very efficient, and, stuff like that. Finally, coming to this point about the alpha, the ability of active funds to generate alpha and to do that consistently. These two things are two different things. One is I generate alpha. This year I'm doing well. Next year, possibly I don't perform, some other fund performs, right? So, alpha and consistency of generating alpha. There is a lot of study already, even in India, that generating alpha is actually a big deal. It's not easy. In fact, a lot of funds tend to underperform the benchmark. I do not want to put a statistic to it and scare investors, but fact of the matter is a lot of active funds tend to underperform the benchmark. And the second point is to identify a fund which can consistently outperform. A fund generates good return this year, you will flock it, you will go and invest into that, only to realize that the next year that fund underperforms, some other fund comes into the picture, and so on and so forth. So when you think about it, do you really need to do all that? Let me get market returns. Within market, there are multiple ways to enhance my risk and return. Suppose I want to not just restrict myself to Nifty, let me go to mid cap. Let me do a thematic within passives, or the strategy. So multiple options are there, right? So what you mentioned is just one small aspect, and even that is questionable.
Okay, I think I understand where this is coming from. ये जो part आप जो बता रहे हो कि 50% growth हुआ है in demand for passives. I think mainly it is because of many people coming on record and saying कि यार आप beginner हो, कोई बात नहीं, index fund में डाल दो. So that can be one of the factor as well. Okay, okay. Coming back to ETFs, I have seen that there are international ETFs as well, जो चाइना के स्टॉक्स में इन्वेस्ट करता है या यूएस के स्टॉक्स में इन्वेस्ट करता है या इवन ऑस्ट्रेलिया के स्टॉक्स में इन्वेस्ट करता है. डू यू थिंक दे आर गुड फॉर एन इन्वेस्टर कि यार मुझे थोड़ा सा डाइवर्सिफाई करना है, इंटरनेशनल एक्सपोजर लेना है, तो कैन आई टेक दैट एक्सपोजर विद द हेल्प ऑफ ETFs?
So absolutely. So even we have a ETF called Hang Seng ETF, which invests into stocks listed in the Hong Kong Stock Exchange. It's a good play on China. Likewise, in the industry, there are a lot of other ETFs giving exposure to Nasdaq and other types of markets. It's absolutely necessary, important for investors to consider diversification and not invest only into India. So it really helps. But having said that, unfortunately, right now, there are restrictions in terms of investing in overseas funds because of RBI limits. There are limits placed for mutual fund industry, and since that limit has got exhausted, new purchases, new transactions are not allowed in overseas funds. To that extent, these funds are now trading at anomalies and dismal prices. They are actually trading at a premium. So one needs to be very careful at this point in time. But in general, whether should they consider investing in overseas funds, including in passives, ETFs, the answer is yes.
Okay, thank you for answering this on international ETFs. Now, I have observed something with regards to gold ETF. Okay, now बहुत लोग बोलते हैं कि आप physical gold मत खरीदो, आप digital gold की तरफ move करो. Gold bond was one of the favorite investment opportunity, but RBI ने फिलहाल वो stop कर दिया है. तो next digital opportunity for gold is gold ETF. So I'm sure कि बहुत हमारे audience जो होगी वो gold ETF की तरफ flock किया होगा लोगों ने. But gold ETF में मैंने एक flaw देखा है. क्योंकि मैंने personally buy किया था, so I observed it. कि अगर किसी दिन फिजिकल गोल्ड का प्राइस अप जा भी रहा है, ओके, बट अगर उस दिन मार्केट्स डाउन है, इफ द मार्केट्स आर डाउन, इफ देयर इज लॉट ऑफ सेलिंग प्रेशर, सो गोल्ड ETF इन स्पाइट ऑफ द अंडरलाइंग इंस्ट्रूमेंट गोइंग अप, द गोल्ड ETF प्राइस इज गोइंग डाउन. सो इजंट दैट अ फ्लॉ विद ETF?
Yeah. So gold ETF is a good way to take exposure to gold, and they're completely backed by physical gold. So when you're buying a gold ETF, we are giving you units, but those units are backed by physical gold. The physical gold is stored in walls, in big walls, huge bars, all of that. So effectively, you're buying physical gold, but the medium is gold ETF, right? That's number
Right.
one. And the prices, the returns of gold ETF tends to track that of the gold prices, except for the fact that there is a 3% GST and of course expense ratio. So these two things will be there. So when you look at the net asset value, which is calculated at the end of the day, basis the gold price, there will be very similar. It will be very similar to the gold prices, the gold movement, but for these two things, right? But if you're trading on the exchange, suppose you had bought ETF during the day, like at 11 o'clock, and then you're selling at a point in time, your actual returns, as you rightly pointed out, could be different, and that is a phenomena not applicable only to gold, even for other ETFs, right? When you transact on the exchange, depending on the liquidity, depending on the volume on that particular day, at that particular moment, your prices can be slightly different, right? For example, you mentioned that when you bought, probably there was more demand for gold than selling that was coming through. It may trade at a slight premium than to the underlying value or the underlying NAV, right? So to that extent, there can be slight differences. You need to be mindful about that, and this is, as I said, not a concept only applicable to gold, all ETFs, right? Even Nifty or anything, any other ETF for that matter. Therefore, you'll be better advised that with an ETF, look at slightly larger funds and those with good volumes. The more the trading volume, more the liquidity, the impact cost will be lower, which means that the ETF will trade very close to the intrinsic value.
Okay, the actual commodity, underlying commodity.
Yes. Yes.
Okay, so it is possible कि during intraday शायद prices match नहीं कर रहे with the physical commodity, but अगर मैं ऐसा fund select करूँ जैसा आपने कहा कि which is more liquid and which has large
volume, trading
large
volumes. Yeah.
So there is a possibility कि by day end or within end of the month it will match the underlying
No,
prices.
when a ETF is liquid, trading volume is good. The point at which you're transacting, when you're buying it or selling it, most likely you will be selling it or buying it at the prevailing prices. Right. Whatever is the underlying, we call it INAV, the indicative NAV. Suppose Nifty at 11 o'clock is trading at a certain level. Based on that, the ETF units are having a value, NAV of a certain level. You should be able to transact very close to that level and not pay a premium or a discount to that. So that will happen only when the ETF is very liquid and there is active transactions that are happening in terms of buying and selling.
Okay.
Yeah.
Mr. Arun, what is your outlook on the current market? Do you think there is still a bubble out there?
So in passives generally, we refrain from giving market outlook. It is coming from this belief that markets are inherently very difficult to preempt and time, and you'll be better off than trying to time the market than to take a call as to what type of products to invest. Take that. So the meaning of passive exposure itself is not to kind of get into too much activity, too much active management, even in your thoughts, right? So to that extent, we generally refrain from. You look at markets, right? End of March, April beginning, there was this, so-called Liberation Day that was coming through, and it was so fearful, and it looked like it was the end of the world and everything was falling apart and stuff like that. And after that, what had happened, the last few days and the last week or so, every day markets have been going to 2.5%, 3% up as we are recording this, right? So it's very difficult, and you can take multiple examples from the past, like in COVID times, for example, right? It looked like the entire world was collapsing, and markets, forget about it. And we had the mother of all bull run. We saw that multiple other things, even domestic events like election, markets did extremely well at some point in time, and then people thought nothing can go wrong, and then the next year will be extremely bad. So it's very, very difficult, especially in the short term, to predict markets. Having said that, since you explicitly asked for a view, in the near term, a lot of uncertainties are going on. It's very difficult for even businesses to take a call as to know how they should be prepared. And every day, a lot of things are changing. So we need to be really mindful. Markets are indeed very volatile. We do expect that volatility to be a phenomena for the markets for some more time. But a lot of good things are also happening. In the meantime, we should not forget that. One, from an economic standpoint, a lot of things are falling in place. We are in the interest rate cutting cycle, a falling cycle. Inflation is actually a 5.5-year low. We are at 3.34% inflation. RBI has been pumping in a lot of liquidity. That part is good. The GDP growth, the GST collection, a lot of other things are holding up quite well. The corporate earnings have been slightly disappointing over the last 3 quarters. But we are now getting to a stage where the base effect is looking good, and going forward, a lot of other things like monsoon is slated to be good. India's dependence on export is not that great, so a lot of things domestically are also good. So we are reasonably well placed, and even from this confusions about global trade and other things are going on. So from that perspective, a lot of things look actually good, and more importantly, we should understand that markets had already corrected from the peak. In fact, markets had been correcting from September. So despite the fact that 2.5 years markets have been going one way up, we've had a significant correction across the market, 10, 15, 20%, some theme sector even more. So we have gotten into a zone where even the valuations may offer comfort. So I think for the medium long term outlook, according to us, is fairly good. But obviously, one needs to understand the near term volatility and accept it as part of the investing game.
Okay, so I think that is where passive investing comes into picture also.
No, this is common for both passive and active. They are just means to investing, right? Of some reason, if you say that, look, I do not want to take additional risk of fund managers taking a call. A lot of fund managers, for example, are now taking cash calls, thinking that it's very volatile. Just imagine end of March or this thing, you had a lot of cash calls. Today, those portfolios will be hurting. Right. In passives, that doesn't happen. It's always fully invested. It can work both ways. So you can argue saying that, okay, I've had 100% invested. When markets fall, to that extent you may fall more. So that can also happen. But if you're ready and if you've made a decision to invest in equity, might as well invest, right? What is the point of saying 100, 90, 85, right? So you do that and let it work for you in the longer term, right? So that's the way, and you know exactly what you're getting into. The true to label part, you've decided saying that, okay, I want to be in large cap, therefore Nifty or SenSex. Or I want to play, okay, small caps have taken a good amount of correction. Let me get into small cap. Or no, markets are going to be volatile now. Let me get into a low volatile product. It has a relatively better risk return profile. So you have choices there and.
So I think based on their individual risk profile or individual risk capacity, they can make the decision.
Yeah, and their preference, yes.
Okay. So, any message that you would like to give to our audience who are new to investing in ETFs?
So ETFs, index funds, they're just means to investing into the market, right? If you're choosing an equity ETF or equity index fund, please understand that the risks are very, very similar, right? At the margin, it can be slightly less, slightly more, but end of the day, you're taking equity risk. So you need to, first of all, keep that in mind, that you are getting into an equity product and you necessarily need to have long term. Now, why do we say long term? Because the near term is very uncertain at any point in time, not just now. At any point in time, even when things are looking rosy, there can come suddenly times then, it can go down and vice versa, right? Near term is extremely difficult to call out. Therefore, when you are getting into equity through including ETFs and index funds, keep that in mind that underlying is equity. So therefore, you need to have that patience, the wherewithal to stomach that volatility, to keep invested for a longer period of time. But within that, passives, particularly ETF and index, have a lot of advantages which we spoke about. You are taking exposure to the market, you're keeping it simple, it comes to you at low cost, you are in control of your investments by and large, and you can expect a fund to be what you signed up for now and forever. It will be like that, right? So those are the differences. And of course, ETF particularly allows you to transact during the day. You can also, kind of take those advantages. So that's it.
Okay, great. Thank you very much for being here. I'm very sure कि आज हमारे ऑडियंस ने बहुत कुछ सीखा होगा, बहुत enjoy किया. I personally enjoyed listening to you a lot. So thank you very much, Arun sir, for being here.
Thank you very much, Azil. Pleasure talking to the audience. Thank you very much.
Okay, so my dear audience, I hope you all enjoyed our podcast today. Please comment what did you enjoy the most about this conversation, and also let us know what more you want to hear from us. Please keep subscribing to our channel, and I will see you all in our next podcast.